Here's a breakdown of the first trade of 2026. Got a beautiful pre-R setup on Monday 12th January. This was on Cards APY and you can see we were going long. So I'll start my analysis on the daily time frame. So this pair has been pretty bullish. If you minimize, you'll see for the last couple of years. Last year at this month of March, I did mark my level of support here and my prediction was price was going to continue bouncing off from this level of support, push all the way upwards because this support had worked for a long period of time, as you can see. And that's exactly what happened. We got this price bouncing off, did a small retracement, another impulse, came and bounced off here again. Most interestingly was this bounce off was also at another level of support. So if I mark here and I minimize, you will see same level had also acted as support in the past. Come to the daily bias on 12th of January, which is now here. I was confident to take my trade because the previous day had also closed quite bullish, as you can see here. So for my strategy, if yesterday we were buying, I always expect a high chance of the following day to also have some strong bulls. So we move to the M15 where I'm looking for my entries. I start my trading day at 6 a.m. so all I'll do is push this to 6. Usually when I wake up, I can either wait for the market to do a pullback or sometimes, depending with my strategy, I could just still catch the continuation move and ride with the trend. So for this day, based on the previous price action, especially on the 1 hour time frame, the price was just from doing a very long pullback here, and I was expecting this trend was going to continue pushing upwards. Like you can see, the trend has been bullish. So for me, this was just a pullback. By Monday, price was at this point before I took my entry. It had gotten some rejection because, as you can see, this was a key structure point, but I was expecting that price will do this consolidation here and then eventually break out to the upside. So usually all I look for is a W pattern for an entry. So from 6 a.m. the first significant pattern I saw was at about this point in time here, where we had this selling candle, buying candle, selling candle, buying candle. Then I just wait for the 1 hour candlestick to close bullish and I'll have my execution. So by this point in time, the previous 1 hour was very bearish, so I ignored this pattern, continued studying the market, and eventually found another pattern. So after finding this second pattern, which is here, basically sell, buy, just come and mark my center point, wait for price to come and retrace with this next candle. Then I just go and cross check to wait for a bullish 1 hour candlestick close. So if you check, this is the 1 hour time frame. This candle at exactly 12 had closed quite bullish with a long way to the downside, and that's enough confirmation for me. So that means when I got my retest at about 1 p.m. it was valid. Just came and dragged my long position, use a stop loss of about 15, and I do a 1:3, so that means I'm looking for about 45 pips. And just like that, we extend. The trade took quite a long period of time. It was actually an overnight trade, so it ended up closing at around, was it 4 or 5 a.m. the following morning. And just like that, we hit a 1:3 risk to reward ratio. Anyway, a couple of members in our community were still able to capitalize. They caught the trade on time, and most of them actually hit TP. And the same analysis had already been done on Sunday, pre-week market breakdown. So that's it for a trade breakdown. Links in bio to check out our community.